Hey guys, what's up? Today I'm gonna show you how to analyze high probability trades on the Forex trading market. So let's begin. So on GBP USD, as we can see over here, this is our monthly time frame and that's where we start. And so the first thing we're gonna do is just identify some key support levels and resistance levels and trend lines. So let's begin with the trend line. Most people would draw a trend line like this, but I don't think this is accurate. Why? Because if we go into the line chart, as you can see, there's going to be only a couple of touches here. You want to draw a trend line where there's the most touches. So really the most touches, if we just move towards the downwards direction a little bit, the trend, there's 1 touch, 2 touch, 3, 4, 5, 6, 7. So 7 touches over here rather than a couple of touches over here. We really want to move our trend in the direction where there's a lot more touches than a few touches, because it means the market has respected this area a lot more. And this little dip towards the upwards direction is only a stop hunt. So going back to the candlestick patterns, what else are we seeing? So we're not going to identify all areas of support and resistance because this is the monthly time frame. It usually takes time for the market to move, 1,000 or 2,000 pips. So we're only going to identify the areas of importance straight away. So the first area of importance is going to be here. Why is that? Because this is the lowest it has ever been on the GBP USD pair. So the next thing we're going to analyze is over here. We're going to find our resistance zone, which should be around this area. There's the most touches for the monthly. There we go. We will just quickly change the colors to blue. So since we have identified our areas of resistance, support and trend lines, there's nothing else we're going to do and see on the monthly time frame. So we need to zoom in a little bit and go to the weekly. So this is the weekly time frame. We can see much more information around this area and time frame. What can we see? It's bouncing in between these two lines. Obviously there was a big break towards the upwards direction. Then it went back to this consolidation phase, which has been respected in the last couple of years. So what we want to do on the weekly is just identify the mid-range zone. To identify the mid-range zone, we're going to use the rectangle tool over here and drag this rectangle tool around this zone. This is the area of the most touches. And what we're going to do is just change its color to yellow. Right, since we have identified a mid-range zone, we're not seeing a lot more action on the weekly, so we need to go to the daily time frame. There we go. The daily time frame is where most of the action happens. So as we can see over here, it has broken our mid-range zone towards the upside and has been respecting it. It did make a lower low, which has potential to break it towards the downside, but not currently. It is fluctuating in between these two areas. Let me mark them real quick. There we go. This is our first area. We're going to mark our daily resistance with this red rectangle tool and mark our support zone with this daily rectangle tool towards the downside. And we can see now much more clearly, it's been consolidating on the daily since 16th of October, to be fair. It has been consolidating for a good couple of months now. So what we're waiting for is a break towards the downside to enter this trade. Why would we not enter towards the upside? Well, it's very simple, because there's a lot of pressure from a monthly time frame, which is certainly going to have a lot of sell orders. We also have a resistance zone from a monthly time frame where it's going to have an army of sell orders. And what I mean by army is just massive amounts of orders in this area, and it's just going to push the market anytime. So even if we entered the trade on a break, let's say if it breaks our daily resistance zone with a big bullish engulfing candle, it's very likely that at some point of that break, sell orders are going to come in the market and going to push the market down. So what most likely would happen is going to just have some sort of push, as I marked with these couple of candles. Sorry about these bad imitation candles, but I try my best. Anyway, it would look something in regards to this. It would push the market up, but then because of a lot of sell orders, it would just push the market back down with this red bearish engulfing candle, and you would literally lose this trade because your stop loss would be hit. And that's why we cannot trade towards the upwards direction, because it's just simply too risky. So what's our alternative now? Well, we have the downside, but what we are waiting for is a push towards the downside like this. A big push towards the downside, breaking our previous support zone and previous mid-range zone on the weekly time frame. We would have to break it with a big bearish engulfing candle, have some sort of exhaustion towards this area, and then come back down and start making money. That would be our ideal trade, which would have a potential to earn us around let's have a look, 450 pips or so. Right, just to explain it more clearly, I put a monthly resistance zone, monthly support zone, weekly sensitivity zone. We also can try to put some candlesticks. So what we're waiting for is this. Let's just maybe make this much smaller. So we would have to have some sort of break like this. 2 candles, 3 candles, however many candles, but strong push towards the downside, which is basically what I marked with this line. A strong push to the downside, closed. Then after a push, there's always exhaustion. So we would be expecting some green candles to come in the market eventually. So we would see some green candles push towards the upside, rejecting our weekly sensitivity zones. So with a lot of wicks, just imagine this candle has a wick. With a lot of wicks, you know, a couple of candles like these. There we go, a couple of candles like these, which would mean there's a lot of sell pressure on this weekly zone. And then eventually we would wait for another big a bearish engulfing candle close, you know, a big red candle that swallows all the rest of the candles previously seen, and then we would enter the trade, which would mean all the criteria is confirmed and we're ready, and it's gonna be a high probability trade. And we would put our first take profit around this level of area. Let's just make it like this. So it would be 156 pips. Let's just put second area. So we find some sensitivity. The previous sensitivity was around this line. So there we go, 135 pips take profit. We can make it different color just so you can see take profit level 2. And take profit level 3 would be obviously the monthly support zone. So around this area over here, and make it darker as well. So this would be our trade. It would be a very, very nice trade. We're risking 200 pips to profit around 450, which is definitely decent. Not 3-to-1 risk to reward ratio, a little bit less than that, but it's still a valid trade. And if you go low risk, it could be very, very good. Obviously, to enter this trade, we would have to go in the 4-hourly time frame. Let's just delete these real quick. Go into the 4-hourly. As we can see a little bit more clearly, it's definitely a lot zoomed in. As you can see, our take profit levels, monthly resistance zone, monthly support zone, weekly zone, and there we go. What we would be waiting for the 4-hourly time frame is some sort of push, obviously, to the downside with these candles over here, and then we would be waiting for a rejection, you know, of these candles over here. As mentioned before, it would be something in regards to this. A lot of these, which means there's a lot of selling pressure, and then we would enter on a bearish engulfing candle, which would be a little bit bigger, swallowing these candles. You always enter on the lower time frames because after a big push on the higher time frames, there's always a small exhaustion on the lower time frames, and that's where you would enter the trade for better entry and more pips to profit. So let's have a look at some other currency pairs just to see if we can do the same thing over here. GBP AUD. So we're starting off the monthly. As always, very simple. We're gonna identify our areas of sensitivity, trend lines, and all that. So this first thing we're gonna do is just add the trend line. Obviously we can add it like that, but as I mentioned before, if you want an accurate trend line, you go into the line chart, and as you can see, I was way off. We just put it over here, and boom, it's a very valid trend line. 1, 2, 3 touches, 1 touch over here, and it's coming for a 4th touch eventually, very, very shortly, to be fair. So we have identified this trend line. We can go back to the candlesticks, and let's see what's happening on the monthly. We also can identify another trend line. I missed it out just now. Let's just have a look. There we go. We have identified our short-term monthly trend line. As you can see over here, the market currently is getting squeezed, and it's gonna break towards the downside or the upside, but I'll explain that in just a second. Let's go back to the candlesticks, and we can see over here we currently identified everything from the downside to the upside, and what we need to do is just find some areas of importance, support and resistance areas. So that's what we're gonna do. We're gonna select the rectangle tool yet again. We're gonna find area of importance, which is here. It bounced back a few times, as you can see, touch here, few touches here. We could even make it a little bit bigger. There we go. That's a decent horizontal resistance line. We're also gonna make it blue. There we go. And we also can identify another zone, which is the support zone, which would be around this area because that's where the most touches were. And there we go. We currently have support and resistance areas, our trend lines drawn on the monthly, and let's have a look on the weekly. So what can we see on the weekly? We can see everything zoomed in a little bit more. We can see our monthly trend line going down, monthly trend line going up, resistance zones, support zones, but we need to identify a mid-range zone as well. So we can identify it over here, a very small one, but price has respected this zone. We can make it a little bit bigger, just that touch over there, maybe around here. There we go. Make it yellow because I like this color for the weekly. And there we go. What can we see on the weekly? We can see the price is currently pushing towards the upside and trying to fight a lot of sell orders of the monthly resistance zone. As I mentioned before, it's an army of sell orders, so it's going to be very, very hard to break it. So going to the daily, as we can see, it's developing a double top, first top and second top. Obviously a bearish candle, which indicates that it could be going down, but to have this high probability trade, we really need to identify a few more things. I could tell you guys to identify the daily resistance zone, which would be around this level over here, but there's no point because the monthly resistance zone is here and pretty much tells us the same thing. There's a lot of sell orders in this area, but we can leave it open just for the sake of it. We have different colors for a reason, and we can identify our support zone over here. So this is our daily support and resistance zones. It's currently broken our daily resistance zone. But as we know, the monthly resistance zone is very, very strong and it's going to have a lot of sell pressure. This means there's going to be an army of sell orders, you know, pushing the market down. And never give up that easy. It's like a Spartan war, you know, there's going to be a lot of sell orders trying to push the market down back around here. And maybe we could enter somewhere around here. But currently that is not what is happening. So really, if we would want to enter a trade, you know, long, we would have to wait for a big push to the upside, you know, breaking our monthly trend line, going towards the downwards direction and breaking our monthly resistance zone as well with a big bullish engulfing candle, a big candle over here, even a couple of candles, you know, breaking towards the upside. There's going to be then pullback or some sort of exhaustion because after a big push, you know, an army of, you know, buyers, they need some rest. So there's always going to be some sort of exhaustion. So it would have like a red candle or a couple of red candles, just, you know, chilling out. It would have like a big push, exhaustion, and then a massive push towards the upside. If we just copy this real quick, we would have a massive push to the upside, basically swallowing these two bearish candles, a big candle over here, and then we would enter our trade long with a lot of profit because obviously this is monthly analysis. The pip size is very, very big on these time frames, so we would enter long and make a lot of money. However, entering short is a little bit different. We could potentially enter a short if the market breaks towards the downside and breaks our daily support and resistance zone, well, whichever way you want to look at it, and then we would have some sort of exhaustion. We could enter our trade over here, make it short. How much would it be? It would be around 180 pips. We would have our stop loss around 80 pips. So it would be around, you know, 2-to-1 risk to reward ratio, which is okay. It's not ideal. We ideally want to trade, you know, 3-to-1, but sometimes we can, you know, low risk it and maybe place a few trades. We can obviously have our first take profit over here, for a second take profit around this area, and third take profit just to move a little bit more. So the trades would look a little bit something like this. We would have a stop loss level, first take profit level, second take profit level, third take profit level, and expect the market to hit this level over here because it's broken our previous daily support zone, which becomes resistance. We push the market down, and obviously we know there's an army of sell orders over here. We also know that this trend line over here hasn't been broken since forever on the monthly time frame. Since like 10 years ago, he hasn't broken this line at all, which means that there's going to be a lot of sell sensitivity towards this area over here. So it's very likely that the market will come down and pull the market down and hit this level over here. So just to recap, monthly resistance, monthly support, weekly sensitivity. We probably will not see a break towards the upside because it's very unlikely. There's a big monthly trend line going down and also a monthly resistance zone over here, which has an army of sell orders. So it's probably going to keep the market down for a while, or at least another year, unless some fundamental big news happens. So very likely, if you want to trade this, you would have to go short. However, this is Forex and stuff does happen over here. So if the market just tends to break towards the upside with a big bullish engulfing candle, obviously have exhaustion, and then have another bullish engulfing candle close towards the upside, confirming and swallowing the rest of the sell candles, we would have a massive trade towards the upside, and we would have free range to make a lot of pips. So I hope you enjoyed these videos, guys. If you want to join my VIP trading signals group, you're more than welcome to, or a cool trading robot that is profitable as well. All the links are down in the description below, and take care, guys. Have a nice day. Goodbye.
Ain't about money, it's about being loyal. Cause when I had nothing, they stayed on my soil. The grass might be greener on the other side, but not for the ones who left me out to dry. I can forget, but I never forget. Money is power, but care about respect. If you've been focused on credit or debit, then I'ma pay you a reality check. Some of the richest be feeling depressed. Material shit don't compare to the rest. I move around with my real ones.